Have you noticed how bleak the news has become about almost any topic? Well, unfortunately, as we go through this video, I've got some bleak news to share with you as well. But it's not exactly what you think. So I am Justin Miller. This is the March 2022 residential real estate market update for the Las Vegas Valley, specifically for single-family residential resale. And let's dive right into the numbers. Now, the first set of numbers, not bleak at all, unless maybe you're not yet a homeowner and you're sitting on the sideline waiting for prices to collapse. Because some people think that may happen. Well, in reality, median sale price for single-family residential resale in Las Vegas Valley at the end of February of 2022 was $450,000. Now that's up a lot. It's up $20,000 or 4.7% from the $430,000 median sale price at the end of January. It's up a staggering 28.6% or $100,000 from the $350,000 at the end of February of 2021. And by the way, it's another record. Prices are not going down. And if you're waiting and hoping that prices are going to go down, you're on the wrong side of the line. You're on the wrong side of what's taking place in this market. Prices are going up. They've continued to go up and they'll continue to go up further. You know that often I include price per foot, and it's informative. That price per foot number, interestingly, for February of 2022, $244. That's the median price per foot of all of the homes that sold out there. That's up from $235 the month prior. That's up 3.8%. That is another record high price on the price per foot. But notice we went up 3.8% at the median price per foot, where we were up 4.7% at the median sales price. That suggests actually a mix toward properties that may be priced a mix toward properties that removes some at the high end and adds some back end at the low end, so that effectively the middle of the market price is a little bit different on a per foot basis. Remember, per foot is skewed higher by large properties. It's skewed higher by high-end finishes and appliances. It's skewed higher by amenities like pools and things like that. It's skewed higher as well by going toward really large homes or really small homes. And so what we see is price per foot going up, but going up at a little bit lesser pace than we're seeing median price go up at. Year over year, price per foot increased by 29.1% from 189. That's just slightly, marginally higher, 0.5% higher than the rate of increase that we saw year over year for median sale price. Because you'll remember last year, property sales were skewing into the higher end of the market, and we were seeing that price per foot number go up a little bit more quickly than we were seeing the median sales price. In January and in February, that's reversed, and we've seen actually median sales price going up quicker than price per foot, which suggests a skewing in the market away from the top end. By the way, there is one other thing that I want to talk about, or that I want to comment on. It's kind of interesting. I looked it up yesterday as I was getting ready to pull the data for this video. The inflation adjusted dollar figure for median resale single family homes in the Las Vegas Valley from June of 2006, when we'd reached the nominal height from the time prior to the housing crisis. That number had been $314,700. On an inflation-adjusted basis, we have just exceeded that number. We would be at $438,875. We are now $11,125 higher than where we were in June of 2006 on an inflation-adjusted basis. This is the very first time since June of 2006 that we've actually, on an inflation-adjusted basis, managed to crest that level. We're truly sitting at record pricing now in the single-family residential resale market in Las Vegas. We've had 2 years of interest rate issues where interest rates went down, but for the past year, interest rates have been going up. Right? Interest rates bottomed out at about 2.8%, and right now they're about 4%. They're up 120, 125 basis points. Percentage-wise, from 2.8%, that's actually a big increase. Now, interest rates continue to be close to record lows. Right? If we look at interest rates over a longer period of time, interest rates are still really, really good. And those interest rates, they support the market? Sure, that's one of the factors supporting the market. Now, it may be painful for some people. There may be other people who get to take advantage of that situation. Prices are going higher. They're not going lower. And right now, prices going higher are predicated on high levels of demand, and we don't even need increasing demand. We have demand that exceeds supply, and that pushes prices higher while people who need housing are competing with each other to get the limited supply. That demand, even if not increasing, and it's going up with number of people arriving in Las Vegas, even if it's going down a little bit with higher interest rates, that demand, even at a static level, is sufficient to keep pushing prices higher. And limited supply, which we have, and we'll talk more about it as we go through this video, limited supply will push prices higher. Prices are going higher. There's just no two ways about it. And if that's not what you want to hear, I'm sorry. But that's what's going on in the larger context as we look at the individual data points of the market update. All right. So we've seen prices going higher on a per foot basis, record level, prices going higher on a median sales basis, record level, and those are catching up with each other, that they're about the same level of price increase year over year on percentage terms. So what about units sold? Units sold, 2,401 in February of 2022. Now, that is down. It's down from 2,488. It's down 3.5% from January, or 87 houses. Now, that's not great news, but it means the market's definitely functioning. We're definitely getting sales. Now, this number is also down from a year ago. It's down from 2,607, or down 7.9% from the number that sold in February of 2021. Now, I want to caution you, as I did throughout the first half of last year, well, the 2 middle quarters of last year, where year-over-year comparisons start to get very deceptive. Last year in Q2 and Q3, things looked really strong relative to 2020 because that's when we were having our pandemic shutdowns. 2022 comparison to 2021 is challenging in the real estate market because in 2021, we sold a record number of houses and condos and townhomes in the Las Vegas Valley. In total, 51,000 approximately residential units sold last year in the Las Vegas Valley, a record by well more than 10%. So when we're looking at year-over-year comparisons, you have to be a little bit careful. We're down 7.9% from incredibly strong number 1 year ago. We're down 87 homes from where we were last month. But remember, there are things that drive sales, and it's beyond just simply contracts written. And so let's shift our focus from the statistics that were backward looking, what happened during the previous months, to those statistics that, although they come from the previous months, look forward in time. I'm Justin Miller with the Chong Miller Group. I produce these videos to put valuable real estate information into the public domain. If you find these videos to be interesting, helpful, or have usable content, please subscribe to our YouTube channel. And as they say in the YouTube universe, please smash the like button. That way I'll know to continue to produce videos like this. Thank you. And now back to our show. So the first is pending home sales or contracts that were written. Pending home sales in February of 2022, 2,875 single-family residential resale went into contract. That's up. That's up 6.4% from the 2,701 pending in at the end of January 2022. It's actually the second highest February, going all the way back to 2012, right? Where 2012 was when we were starting to really emerge from the housing crisis, and we had large institutional buyers here putting all sorts of houses into contract. And the only year that was higher until we get back to 2012 was last year when we had 3,123 pending home sales. Again, a record. We're down 7.9% from that. All right. Now, what about for sale, right? So we've got pendings. Those are likely to close in this next month, in March. But we also need some inventory to be able to sell from. There were 2,346 homes for sale, standing inventory, single-family residential resale, at the end of February 2022. That's down from 2,775, or down 15.5% from the already record low inventory that we saw at the end of January. We are again at record low inventory at the end of February. Last year, we had 3,641 homes for sale at the end of February of 2021. We're down 35.6% from that. Now, last year, not only were we seeing sales taking place, churning through the inventory that was there, but we were seeing so much demand exceeding that supply that prices kept going up and up and up throughout the entire year. And we have 35.6% less inventory at the end of February than what we had last year. We have an acutely low inventory problem. This is a crisis actually here in the Las Vegas Valley. And this is what's impacting home sales now. If it's not for sale, it's probably not going to sell. And if it doesn't go into contract, it can't close. Now, at the margin, there may be some ways to affect that. But in the global picture, it means that our inventory is so tightly constrained right now that it's pulling down the number of sales that we can actually see represented in the valley. Now, what about new listings? Because new listings are where most of our new inventory is going to come from. 2,923 new listings in February of 2022. That's up from January. But we would seasonally expect more listings to occur as we move out of the middle of the middle of winter and in toward spring. We're up 1.6% from 2,878. But we're down again from where we were last year. We're down 5.6% from 3,095. So we have a weaker new into market than what we saw last year on already a weaker inventory number than what we saw last year, with a greater pending number than what we see normally, down a little bit from last year when it was a record level. In other words, we're still eating through the inventory. Demand is very clearly exceeding the supply that's out there. Now, I want to talk a little bit about new construction. I don't generally put new construction into the data that I look at for a wide variety of reasons. One, I'm looking at resale, right? If you own a home and you go to sell it, you're a resale and you're competing with other resale homes. Developers may do things that allow them to differentiate their product from your house in a way that makes it difficult to compare, but also makes it such that some buyers are only looking for one or they're only looking for the other. And so they're segregated in the presentation that I give you. They're not segregated completely in the presentation that comes out of the multiple listing service itself or the Las Vegas Realtors Association. And consequently, they're not segregated out from the press releases that most other people just simply parrot, including the newspapers, when you look and see what's going on in the real estate market. So I want to talk just a little bit about new construction. You go around the valley, you see a lot of new properties being built. And you could think to yourself, wow, I haven't seen so much new construction housing in the Las Vegas Valley since 2006, and that didn't end well. Is this going to be the same kind of problem? Well, this video is not about new construction. The reality is the numbers are vastly lower than what they were in 2006. But rather, I do want to tell you the building process is different than existed in 2006. Most, not all, but most developers no longer build neighborhoods speculatively. Rather, they build individual houses in neighborhoods, and they build individual houses on demand. In other words, as you go driving around new construction areas, 90%, some neighborhoods a little more, some neighborhoods slightly less, 90% of those houses you see being built, they're already in contract. Developers are not breaking ground on houses unless they already have the written signed contract and deposit monies from those buyers assigned to those individual houses on those individual lots. That's a really different building methodology than had been used here in the Valley and in a lot of other places as we were going through that time frame 2003 to 2006. So why do developers build some things not under contract? Well, some are models, so the models don't have a contract. Some are what are referred to as inventory homes. Developers will put up a few in order to have something for people who come along and say, I need to buy now, I can't wait 6 months or however long it takes to get a new construction home. And so they have a couple of houses. In reality, builders are building as much as they can build right now. They are actually constrained by supply of labor and supply of materials. So builders cannot really ramp up their new construction process right now in any meaningful manner. There are some developers who's quoting as long as 2 years from time somebody writes their contract to purchase their new construction home until they'll be able to move in. Other developers are building, let's say, less grandiose homes, and so they're quicker to build. Very few developers are quoting less than 6 months at this time, from the time you sign a contract until you can actually move in. They're constrained in terms of how quickly they can do something because of not just supply chain bottlenecks, but also labor, also permitting issues, also availability of land. And so some neighborhoods are being built less quickly than one might desire because developers are, in some cases, running low on land, and they don't want to just simply build out everything and have nothing to do for 6 months while they look for more land, because they'll go out of business. They won't have cash flow. So new construction is not a be-all and end-all of the problem we have with regard to inventory. But the reason I want to bring it up in this particular video is because I want to talk about the failure to segregate the new construction homes in the multiple listing service from resale homes. When you as a seller decide to list your home, you're making an individual decision that is in the aggregate a random decision, like all of the other resellers who are making random decisions. Could be motivated by you want to cash out and go rent. It could be motivated by you want to move out of Las Vegas. It could be motivated by you want to change the size of your home, bigger or smaller. It could be motivated by you've got a lot of equity in a home and you want to take it out and move that equity to something else. It could be motivated by any number of factors that when you spread them across the 2,401 that sold in February, are approximately randomly distributed across all of the many reasons that could possibly exist. The ones that are not random are the new construction properties that developers affirmatively decide to list into the multiple listing service. Most new construction never makes it into the multiple listing service. Developers put some of their properties into the MLS, and they do it only for strategic reasons. Now, there's a couple of different strategic reasons. None of them are bad. They're all perfectly fine, but they're strategically motivated by a larger operator, meaning they're not selling one, they're not selling two, they're not selling a portfolio of 3 homes. They're selling a large number of homes, and that has the ability to infect the resale data with stuff that looks actually different, because it's not the same. It's just plain not the same. It's a different population of data. And so I segregated out. Right? What happens if we included it? Well, let's look at February of 2022. That inventory of new construction houses that happen to get listed into the MLS for strategic reasons that sold in the month of February had a median sales price of $446,424. Now, interestingly, that's actually below the median for resale, $450,000. It's also down 4.6% from $468,186 in January of 2022. So those new construction homes that were strategically placed into the MLS, they came down in price 4.6% when the resale market was up 4.7%. They came down from 468,000 to 446,000, which is even below the median sale price for the resale market. Now, how many of them closed? 121, down from 122 in January, so approximately flat. What about newly listed? 121, newly listed in February of 2022, new construction into the MLS. That's down 36.3% from the 190 that had been listed in January of 2022. Now, what that means is new listings in reality for resale, they were up 1.6% between January and February. The new construction down 36.3%. And then let's combine those. Let's combine that new construction 121 units that sold and 121 units that were newly listed with the resale that is the actual information we're looking for and that I analyze every month. That leaves the median sales price across the market at $450,000. But we see in the resale market, that's actually up $20,000 from the month before. If we include all of the data, it's up only $15,000 from the month before. So it's underestimating what's actually going on in the resale market in terms of in terms of price. On new listings, we showed new listings of 2923 for resale if we include those strategically chosen new construction into new listings, that's 3,047. That's down from 3,073 in January. When if we look only at resale, we're actually up 1.6% in new listings. So again, because the new construction data that gets into the MLS is strategically motivated, it is actually a different population, and including it gives us information that's effectively corrupted because we're looking at two different populations trying to squeeze them into the same lens. And what we find is information that becomes less meaningful. At the same time, the information becomes less interpretable. At the same time, the information actually starts to skew in ways that make things look different than what the reality is in the resale market. So that's a really important thing. All right, couple more points. Back on market. There were 1,003 back on market in February of 2022. Remember, back on market is something had gone into contract and for some reason it's fallen out of contract and come back into the market. Why do things come back into the market? Could be a bad appraisal. It could be a bad inspection, right? A buyer says, I found so many problems with this house I was thinking of buying, I don't want it anymore. Right? It could be a buyer loses financing. There could be a variety of reasons. Bad appraisals is something that's significant in the market right now. Is we see significant increases in pricing. It's something we're going to have to be leery of for quite a long time because we're going to keep seeing these appraisals that are coming in based on market issues that are 2 months old as opposed to looking forward in time, is frankly, I think, ought to be done. The other thing I want to point out is we had 2,346 for sale. That's less than the pending, 2,875. 2,346 for sale, standing inventory. That's less than the number of units that closed, 2,401. We're still eating through inventory. And while, yes, we did get 23 new listings into the market in the month of February, that's down 5.6% from the number of new listings we got in February of 2021. We're not seeing demand go down. We are seeing supply go down. In reality, prices will continue to go up as long as we have a limitation on our supply and we have demand that exceeds that. And we've got both high demand and critically low levels of supply. Prices will continue to go up. Some people will express affordability concerns. Some people have been expressing that for a while. We'll overcome the affordability issues. We do every time that we reach into these kinds of problems where people start raising concerns about affordability. There are all sorts of solutions to the affordability issue, and we're not near the top. So, what does that mean for you as a buyer? It means you need to be really aggressive in addressing this market because we are seeing all over this market multiple offers, and we're seeing double-digit multiple offers, 10 offers on a property, 13 offers on a property, 17 offers on a property, because inventory is going down. If you want to buy a property in this market, you need to be really aggressive. You need to have an agent who can advise you about the best ways to be aggressive while also protecting yourself, that make sure you get into contract on a property. It is really rough out there for buyers right now. It really is. We represent buyers. We're happy to represent buyers. And we would be happy to talk with you and figure out if we're the agent that should be representing you to help you through your real estate endeavor. And the truth is, we can't help everybody because some people are not willing to recognize what it's actually taking in this market. You need to be committed and you need to be willing to follow the advice of your agent. And if you're willing to do that, you've been listening to me, you know what I'm like, you know what I say, you know how I talk and how I address things. Give us a call. Would be really happy to sit down with you and figure out how we can best support you in your efforts. If you're a seller, I was looking at the MLS the other day. There are still, in this market, where we are down in inventory 35.6% from where we were last year, where we were already at acutely low inventory levels last year. I'm still seeing properties sitting on market for over a year. Now, most houses will just sell in this market. But if you want to help yourself, you want to make sure that you're getting what you can out of your property and you're doing it in the manner that's best suited for how you want to go through the process. We help sellers, and we'd be happy to sit down and talk with you and figure out what's the actual value of your home. What can you get out of it? How can you benefit by taking the money out of your home and maybe doing something else with that money? You have equity in your home. There is a record level of equity in owners of houses in the Las Vegas Valley. And that money is sitting there potentially usable for stuff. Give us a call, talk to us. We'd be happy to help you. So I am Justin Miller with the Chong Miller Group. We help people buy and sell houses. We help people understand how to best position themselves in the market to be able to come out of a transaction as good as possible, whether you're on the buy side or the sell side. Reach out to us. We'd be happy to help. Thank you.